Hi, welcome back to my four-part series on all the new government loan modification programs that were just announced a few days ago and are directed directly to people who are coming out of forbearance, who cannot pay their bills, cannot pay their mortgages now that the forbearance period is over. Now, these sweeping new programs are brand new. On July 23rd, the White House announced these programs and basically made it very clear that what they're trying to do is delay and stop a foreclosure wave that was very much expected when the coronavirus started and a lot of people lost their jobs. Now, the goal of all these programs is basically a 20 to 25% reduction in the principal and interest portion of the mortgage. And what that means is that if you are unable to pay your mortgage payment, you would get a 20 to 25% reduction, sometimes more, in the principal and interest, which is the if you look at your bill, there's four parts: the escrow, which is the tax and insurance, but then you also have the principal and interest, which is what these programs are targeting, a reduction of 20 to 25% in that portion of your bill. Now, what I'm doing here is I'm doing a four-part series on the different programs that are available for FHA, Fannie Mae, Freddie Mac, the VA, and the USDA. Now, there's also one program that is available to all mortgage holders. Doesn't matter if you have a government-backed mortgage. So I just did an episode on the VA, which you can see right here. And what we're going to talk about now is USDA. Then we're going to do the FHA, and then we're going to talk about the government program that's available to all homeowners. So before we get into the USDA, however, what I want you to do is to like my video and not only subscribe to my channel, which I very much appreciate, but turn on the notifications, because these programs are coming fast and hard, and a lot of people are unaware these things even exist, and you might miss your opportunity to get one of these loan modification programs and reduce your principal and interest payment or other portion of your bill by a significant amount. So please like and subscribe my channel. My name is Diego Mendez. I'm a loan modification, foreclosure, and bankruptcy attorney here in Miami, Florida. I've helped thousands and thousands of people with loan modifications and all kinds of different problems with their mortgages for the last 13 years. I've exclusively practiced this type of law, so I very much understand what people are going through and the different programs and different things that exist now and existed before. I was around in 2008 for the last crash, and what I'm seeing is that the government is trying to do everything in its power to not have a foreclosure wave that we saw during the last recession, the last Great Recession. So again, please like, subscribe, and turn on the notifications so that you can keep getting all my videos, which I keep constantly doing on this subject. Thank you very much. So there's a good number of folks out there that have USDA mortgages. USDA mortgages are very specialized mortgages. There are a lot of folks who are lower income who qualify for these type of mortgages and now who are facing hardships. These folks are dealing with situations where they're coming out of forbearance and they're looking at their job situation, which was different than pre-COVID. Their post-COVID job situation might be a lot worse than it was, and their income might have gone down and they're unable to pay their mortgage. So what the government has done for folks with USDA loans is they've created something called the USDA COVID Special Measure, Special Relief Measure loan modifications. Now, these the goal of these program, or this particular program, is a reduction of 20% of your principal and interest payment. What that means, if you look at your bill, you have the principal and interest and the escrow, which is the tax and the insurance. This is targeted at the principal and interest. The goal of this is to reduce that portion of your bill by 20%. What the government is going to do in this situation is you're going to get a call from somebody from the USDA, from your servicer, and they're going to ask you, are you able to pay your mortgage coming out of forbearance? If you answer yes, then basically nothing will happen other than you're going to get the forbearance put at the end, which is promised to everybody who has one of these government-backed mortgages. However, if you say no to them and you say, I cannot pay my mortgage coming out, then you go into this waterfall. the waterfall basically is first they're going to reduce the interest rate. The interest rate probably down to the market rate. Today is July 25th, and today basically interest rate is 3.5%. So if this happened today, you would get an interest rate of 3.5% at your current term. If by doing that, they get you down to where you need to be so you can afford your mortgage, which is the reduction of 20% of your principal and interest, then that's it. They stop there. If they still can't get that 20% reduction, then they go to a term extension. That means that they, instead of 25 years or 24 years, or however many years you have, they'll extend it out to 30 years. They'll keep extending it out year by year until they get to that magic 20%. So if it's if you're in the 24th year, they'll go to 25, then 26, 27, so on, until they get to that 20%. That's how the waterfall works. When they get to that 20% reduction, they stop. Now, at the end, there's also the Mortgage Recovery Advance, which is basically what that is that they take the forbearance amount, they put it at the end. This is actually, the waterfall is actually backwards. This would actually be done first. But the way that the law is written, this is done last. But it's implied that you do get this. Now, the other thing they can do is they can actually do this to some of the principal also. So even, let's say that you, by doing the term extension and the interest rate reduction, or you have an interest rate that's below 3.5%, therefore they're not going to raise your interest rate, then they can start playing around with the principal and maybe give you a little bit of they take a little bit off the principal, put it at the end, so you pay less overall on your mortgage because the principal is less. So that's another thing that they can do if you have a USDA loan. Now, this is a brand new thing. Now, how do you apply for this? Basically, you're going to get a call and you're going to tell them, I can't afford my mortgage payment. If you can't afford your mortgage payment, don't mess around with these programs just to try to get a lower lower payment. There is no income verification right now, which means that these are no document requests. That means they don't ask for documents to prove anything, but that could change. So if you tell them that you can't afford it, but you actually can afford it, you might run into a problem later on if there's some sort of audit. Who knows? I don't want to put you in a worse situation than you already are. So if you can afford your mortgage payment, you're happy with it, just leave it alone. If you can't, then you can ask for this loan modification. Now remember, when you ask for loan modification, it's almost like starting a loan over again. So you do pay more interest over time than you would have if you just left your loan alone. So that's another reason to just leave your loan alone. But if you truly cannot pay and you need the reduction in payment, then this is a very good program because it does reduce your your principal and interest payment by 20%. So that's it for this USDA program. My name is Diego Mendez. I've been doing this kind of law for 13 years. I've helped a lot of people with loan modifications. And again, there's a lot of programs that are coming out, new programs. This did not exist on the 22nd of July. 23rd, boom, it happened, and now we have a new program. So if you like my channel, please like this video, please subscribe, but not only subscribe, turn on the notifications so you get notifications when I do a new video, because you never know. I might be the one that tells you, hey, you have this new thing, go out and get it. So turn on the notifications, get notified of all the new stuff that we're talking about so that you know you're in the know and you're not one of these folks that basically doesn't understand or doesn't get the information on time and then misses out on something really important. So thank you very much for watching. Go USA in the Olympics, and I hope to see you with more videos very soon.